Rest in peace, shorts. We are looking at another face-ripping rally. Are you guys ready for the rally? Let's go. All right, we're going to touch upon the macro, of course. That's what we do. That's the bread and butter. Then we're going to hit the fundamentals. Then we're going to hit the technicals. We'll do some Q&A. And then what else? If you guys want to challenge me or if anybody has anything new information, we'll talk it through. So let's get into it first. We're going to start with the macro. First and foremost, right? S&P is now pricing in the first rate cut in May 2024, right? We didn't have any rate cuts. Those were taken off the table. There was no rate cuts. Now we're getting rate cuts. What does that tell us? That tells us that the macro is actually improving. And this is because inflation is falling, not because there's an imminent, deep, dark recession. We're going to get into that also. So again, we're seeing that now. The big news, the reason I think what sets off this face-ripping rally, not only is NVDA earnings tomorrow. We have NVDA earnings, okay? So far, the earnings picture is looking pretty solid. But I think what it is here. We have the FOMC minutes getting released tomorrow at, what is this? This is going to be 2 o'clock Eastern time. Right? FOMC minutes. And then we have core PCE 10 days later, 9 days later, whatever, right? But initially the FOMC minutes, okay, they're only going to confirm that the Fed is done, that inflation is coming down, that things are starting to ease. And I don't think the Fed is looking at a deep recession. And I know people are still pushing that narrative, deep, dark recession. It could happen, but the probability is very low. The probability is very low. We're gonna hit on that, right? The other part too at the bottom, core PCE. This is going to solidify even further that core inflation is coming down. That core inflation is making progress. If you need those inflation charts, we'll pull them out. We will pull them out. So yeah, that's what we're looking at, right? And at the same time, I know the recession, people are worried deeply about the recession, but check this chart out. This is credit tightening standards, right? Credit standards are no longer tightening. They're actually starting to ease. Credit standards are easing. This is an inverted chart of the C&I loan survey. Okay. So if credit, we are having delinquencies, there is some weakness, but now we're seeing standards starting to ease a little bit. So you're heading into the easing part of the cycle, right? The Fed is done. Inflation is done. Bond yields are coming down. And that kind of brings us to the dollar and rates becoming a tailwind. We're going to look at the charts for this one. All right. So US dollar, I always say, hey, these are the macro forces. We talk about it every time. The US dollar is easing. Okay, US dollar is easing. Let's start with the dollar. Okay, we'll go to the daily chart for this one. Right, top of the trend. Let's take the RSI off. It looks like it's going to bounce here. We're looking at the RSI. It looks like we're going to get a bounce at some point. But typically, this is not like a stock. The dollar is not a risk-on asset. It signals risk on or risk off. So for the most part, we do have the dollar coming down drastically. It did peak at the top of the cycle. We called this out before. Now that it is coming down, what do we expect? We expect risk assets to move faster, to move quicker. The faster the dollar falls, the more of a tailwind that becomes for Bitcoin, Ethereum, crypto, Tesla. Tesla has, some issues with rates, but risk assets, Nasdaq. And that's why we see Nasdaq breaking out today, right? We're making new highs. We're making new highs for the year. We are headed for all-time highs. I think we're like 4% away. Nasdaq is about 4% away from all-time highs. Let's go. This is the rally. This is the rally. And then when we do turn to rates, okay, 30-year rates, look at them drastically falling. 30-year rates, maybe they come down to 4.3%. This is only going to further fuel risk assets higher. You go to the 10-year rates, right? Because bonds are starting to pick up now. So the recession fears, right? The accumulation into the bond market is actually helping risk assets. What did we say before? Dollar falls, risk assets go higher, bonds go higher. So you're going to get fixed income bid along with stocks and risk assets. That's my view, right? The VIX is at very low levels. These are bull market levels, right? The VIX under 15 is signaling that the rally has just started, that we're getting the second wave of FOMO on that rally, right? Next part of the macro. Okay. Global liquidity is rising. This is very bullish for crypto because it benefits the most, because crypto is the fastest horse when you get monetary inflation, right? What is monetary inflation? It is not street inflation where prices go up for food and housing. and items and services. This is monetary inflation, which affects assets, right? You're getting global liquidity pick up, global liquidity, right? ECB, Chinese central bank, PBOC, Japanese central bank. The biggest economies are now shifting into easing mode at a very low pace. Picks up, as this pace picks up, risk assets are going to fly. So we're in wave. I think we had wave one back in January or back in the summertime. This is wave two FOMO. We got done with the first leg. Now we're looking at the second leg. Qs are going to lead this rally, right? Technology is efficient. We see that in earnings. That actually brings us over to earnings. Look at earnings. Okay, let's look at earnings. Here's the recession that everybody's hoping for. Well, right now S&P 500 companies are citing less and less less and less recessions on their earnings calls, right? They're citing recession less and less on the earnings calls, back to normative levels. So, what does that tell us? That tells us that it got priced in. The recession was already priced in. There is weakness in the market. It is not just black and white. There is some gray area, but you don't need the entire market to be for the market to go higher. You just need the biggest caps, the biggest movers, the biggest revenue growth, the biggest profit margins, the companies that are pulling the S&P that is going to pull risk, that can handle this environment of slowing growth. They're pulling the market higher, right? So again, less and less recession calls on those S&P 500 company earnings calls. And we're almost done with earnings. NVIDIA is the last shoe to drop. Once it drops, once we get the revenue, and there's a lot of demand for AI, it's insane, right? Microsoft, and who's buying AI? It's not consumers. Oh, consumers are slowing, but consumers don't buy AI. It is B2B. Businesses are buying. Who has the most cash? Apple, Amazon, Facebook, Microsoft. They are buying chips, right? Silicon chips, semiconductors. So there's a lot of revenue. There's still a lot of demand. The AI revolution is just getting started and it is working. We're seeing revenues come down, but profit margins boost because AI is increasing productivity at a tenth of a cost. Expect NVIDIA to report pretty good earnings, right? Or the guidance at least to be higher. Now, moving over to earnings surprises, right? So if we take a step back, we're looking backwards here. What are we seeing? The red dotted line is pre-pandemic, right? Pre-pandemic, the 10-year average pre-pandemic of surprises to the upside for S&P earnings. We are above that. So what are we seeing? We're seeing in Q3 of 2023 that earnings estimate expectations are being beat. This means that the analysts are going to have to relook at what they're going to have to take a step back and say, wait a minute, this proficiency, this efficiency narrative is actually working. AI is actually working. Earning profit margins are increasing. And once we get to normative levels, right, into Q4, which earnings are set to go higher, well, we're going to have to readjust. And typically when earnings do bottom, we did get the bottom of earnings. This is showing you after the zero bound, right in the middle, is when earnings bottom. When earnings bottom and they start to turn up, they turn up rapidly. They turn up rapidly, right? Year over year, earnings turn up rapidly. You can see this is the historical view of that. So earnings bottom, we're starting to rip higher. And I think the most bullish chart here for the macro, right? I know this is fundamentals, but for the macro to put the nail in the coffin, global liquidity on the daily chart is starting to turn up, right? And it will turn up because economies are weakening. They've been weakening, right? We're leaving the recession. We're at the recovery stage. We've already priced in the recession. So global liquidity is picking up in the face of the Fed ending the rate hikes. Did they officially end the rate hikes? No, they didn't officially do it, but they're not going to do it because they need to keep expectations tight, right? Because of the wealth effect to some degree. But we do know this all keys on inflation. PPI is coming down, right? Producer prices are falling. Consumer prices may not be falling yet, but the inflation, the rate that they're going up has slowed significantly. As a matter of fact, this is the fastest slowing of inflation, CPI headline core, that we've ever seen in history. Right, that we've ever seen in history. So going back to it, who's going to benefit the most? Well, Bitcoin, just a proxy for risk assets, is lifting because global liquidity is lifting. The Fed is done hiking, and that is the picture. That's what we're staring at here. Okay. Any questions? Fine. Throw out the questions if you have them. We're going to turn to the technicals. We're going to turn to the technicals here. If you guys have any questions, so technicals. Let's go ahead and get to those technicals. We're going to do Q&A also. Let's see, technicals. Put this on here. All right, let's turn to the technicals. Let's take a look at what we have here. We'll start with let's start with the Qs. Start with the Qs here. I took everything off. You can see I've taken I'm going to redraw this. So what are the Qs looking at? Well, we broke out of this, out of this downwards flag. This is a bullish flag pattern. We broke out of the flag pattern. Okay, we turn on the exponential moving averages, right? The red EMA, exponential moving average, is showing the divergence. What does that mean? That means it is showing momentum is lifting significantly. It's the lower time frame exponential moving average is starting to, the slope is very vertical. The vertical slope reflects very vicious momentum to the upside, because these fund managers that were expecting a deep dark recession, right? It just didn't happen. It didn't happen. Now you're getting, you're getting GDP surprise to the upside. So the Qs are benefiting the most from this, and we're getting this vicious rally. This is going to continue because the FOMC minutes are only going to solidify that inflation's coming down, that the Fed is near target. Now we're pricing in hikes in May. Earlier, remember the rate hikes got pushed to December of 2024, right? They got pushed to we're not going to cut rates until, and this is just the Fed speaking, we're not going to cut rates till 2025. Now the market is saying, well, inflation's coming down faster than expected, so we're going to price in those hikes, especially if we do slow in the economy. We're going to price those hikes in, and Nasdaq is taking off because Nasdaq has already proven, tech stocks have already proven that they can still grow their profit margins in the face of a slowdown. So Nasdaq is pushing higher, right? You're getting these EMAs cross to the upside. And then when you turn on the SMA, simple moving averages, same thing. The 50-day, we're back above that 50-day, and we're breaking out. We're breaking out. We're headed for all-time highs. How close are we from all-time highs on the Nasdaq? Let's call it 409, 408, right? We're about 4%, 4.5% from all-time highs. So this means risk assets or technology stocks, the more quality stocks should be on the rise. IWM, small caps, right? They've came off the bottom. They've already lifted off the bottom. There's a lot of support there. And now we're lifting higher. Now we're going back above. We're almost from the middle of this range. We're almost at the middle of this range. And we turn to the S&P. The S&P is not, is strong as Nasdaq at the moment. It's still pretty strong intraday, but it's not as strong as Nasdaq. That's okay, because we're headed for the yearly highs on the S&P. S&P is starting to lift here, right? Bitcoin on crypto. Look at crypto. Bitcoin is just slowly appreciating higher, slowly grinding up. The ETF is around the corner, and a lot of investors are gonna front run this move. People are getting excited. We're at the precipice, right? We're near the breakout moment for Bitcoin. We're gonna see that God candle pretty soon. Is there a pullback? Sure, there could be a nasty pullback. That's just another better entry, not financial advice, right? Ethereum starting to lift a little bit above that 2150 level, really starts to break out, in my view. TLT, I think TLT now bonds are actually breaking out. So we're seeing the bond market play, actually, this is a reverse head and shoulders we've been looking at, and we're starting to get above that level. We should see more momentum. How's the RSI? The RSI is just cruising higher, cruising along here. So as long as that RSI moves up, you're going to get rates lower. Lower rates are going to mean that risk assets move up. They're going to outpace. You're going to see Nasdaq. I bet ARK Invest is really chugging along there. Bond volatility is falling. Okay, so risk premium is falling. This is just a very bullish setup. I don't see anything other than black swan event. Look at this. Triple B spreads, which is a proxy for credit risk, is coming down. So credit risk is coming down. What does that mean? More confidence in the risk trade. Okay, there are people piling into high yield corporate bonds. So that's going to support the equity market for the most part. Do we get the volatility? Look at this is very bullish. The volatility of the VIX is rolling over. So momentum, VIX momentum rolling over. We're at the beginning stages here of wave 2 FOMO. We are looking at wave 2 FOMO. This is the case here, right? This is the case. We're not really seeing any inflation pressures. That is it. We got Palantir breaking out again. Vicious. I think I had a price target at by the end of the cycle, maybe at 50, for somewhere between 50 and 75 for Palantir. When I say the end of the cycle, I'm talking about the end of the macro cycle, which probably plays, I don't know, we don't know, but the next 6 months, lower rates. And this is a risk asset, lower rates, and more lower rates, more liquidity coming into the system, right? Inflation is still falling, productivity is picking up, and this stock literally is a reflection of more productivity because it's the number one AI company in the world according to a lot of metrics. So those are the technicals for those names. Now I'm still looking at Chainlink here. Chainlink is pulling back, right? I think this is going to be, my view, one of the best performing cryptos. I think it breaks into the top 10. Eventually, it has a chance to surpass XRP, to surpass Cardano, to surpass all those other, because it has a real use case, right? Central bank digital currencies, connecting all blockchains, real world assets. It is a computational new service for blockchain in general. So we'll keep our eye out on Chainlink. Now Tesla, this is what I want to really chart here. Okay, Tesla is looking really good here. I just added my last contract, and we'll take a look at that. I added the last contract here for Tesla. Let's remove. Let me hide some of the drawings. Okay, so I'm hiding the drawings. You can see we're in a clear downtrend. We're in a clear downtrend, and this is really from the lows. This is a bullish uptrend, right? We're still in an uptrend overall, and really, what Tesla is showing us is that the momentum is starting to pick up, and once you violate this flag pattern, it's going to get pretty steep. So we're almost at that violation zone. Okay, you can see this is the flag, right? You trend down and then you break out. We saw that earlier. You trend down and then you break out. So we're getting there. If we look a little more intraday, right? The entry point for Tesla has been this reverse head and shoulders. We gap down, and you're always looking for it's either going to break the gap, it's going to fill the gap and go higher, or it's going to break down. But we did get that reverse head and shoulders for Tesla, right? Another very bullish pattern that looks identical to how it did back in May, I believe. So there's your shoulder, there's your head, there's your shoulder. The breakout point, we gapped above it. We gapped above the breakout point. We filled the gap, came back down, almost filled the bottom gap. It always does this, right? It tries to fill the gap, doesn't fill it all the way to the downside. Either way, it's playing these gaps. And once it gets momentum to the upside, which is Nasdaq is going to carry it, while Tesla's going to rip. It's going to rip because all the other, electric vehicle companies are pretty much, they're failing. Their future expectations are lower, and full self-driving is ahead, and that's what we're staring at here. So yeah, Tesla looks pretty primed to break out. Let's go into the intraday, see what it looks like. We had a pretty nice pattern actually intraday. Let's go to that 3-minute chart for Tesla. This is a 3-minute chart. Very big wedge pattern. I think that we just had a big wedge. I call this a wedge pattern, right? We pre-market, we're testing the pre-market high. So above 236, 237, it's a lift-off time, right? But early morning, you sold off. This is always bullish. When Tesla sells off in general, it usually bids higher, much higher. But you do have this wedge forming in the day, during the intraday. Once that wedge breaks out, it's basically momentum to the upside. We're seeing that momentum pick up. You see the intraday wedge break to the upside. We just need to get past the pre-market highs. And it looks like, and Tesla hasn't been too strong, because if you look at Tesla versus the Qs, it just hasn't been as strong. But you have NVIDIA. I think NVIDIA hit all-time highs. No, am I right? I think NVIDIA is at all-time highs today. Yep, all-time highs. NVIDIA is at all-time highs. This is a strong Santa Claus rally, vicious upside rally. Maybe the rally ends in January. Maybe it's strong in February. It's either going to end in December or the end of January, in my view, right? The way I'm pricing things in, that's what it looks like. So far, we're looking pretty strong here. Let's go to take a look back at the macro. Oil, okay, oil is that other concern. Oil's coming down. Oil's still easing. So inflation pressures are just not there. Very bullish upside for the market. And the Qs, S&P and the Qs are just chugging along here, making a lot of progress, right? Intraday, I think are we above the previous levels? Yeah, we're above the previous levels. So we consolidated here for 3 or 4 days. Now we're above that 452 level, and we're liftoff. We're at liftoff, right? The Qs are much stronger. You have FOMC tomorrow, right? FOMC minutes. I mean, what's going to change? FOMC minutes. What is it actually going to change? Nothing. Nothing is going to change, because we basically see, we're basically looking at the shorts starting to cover here. The shorts are covering. There's probably a lot of FOMO. I mean, S&P's up a lot. There's probably a lot of FOMO here because earnings are coming in stronger. The macro forces, the dollar, bond yields, rates, they're all rolling over. They're all easing. Oil is not showing a threat. Oil is easing. It's very soft. So that means there's no really, big headwinds coming in. And I expect this market to continue to rally, right? It continue to rally. And crypto's likely to outpace the rest of the S&P and the Nasdaq at the same time. That's my expectation. What do we got? Any questions here? Any questions? Any charts you guys want to look at? I am banned on TikTok for now, so we won't be doing that. But we do have, FYI, we do have a stream on Wednesday with the CNBC contributor. So stay tuned for that. I'll have the thumbnail up tomorrow, ready for that. Got that one prepared. Nasdaq, Tesla, Bitcoin, crypto, credit standards are easing. Yeah, we're looking good here. Well, I guess that's all we got. That's all we got for you guys. Stay tuned. This is a vicious Santa Claus rally. It should continue. Let's take a look at the before we end. Let's take a look at the let's take a look at the Qs where they can actually go to, because if this does continue, where might it slow down, right? Where might it slow down? Let's go to the daily chart first. Take a look at the daily chart here for the Qs. Let's take that volume off so we can make it a little more clear. All right, yeah, that's a pretty vicious rally there. That's a perfect, that is a really perfect flag pattern. This is a perfect flag pattern, right? You get a double bottom here. This was at the beginning of the year. We had the breakout, which was very vicious. A lot of people didn't see that coming. We consolidated. Oh my God, bear market. Nope, I don't think so. And we're breaking out. So last time we saw this, last time that we saw this, and this is actually bigger than the last time, was about right here. You had the flag, right? You had the dragon flag pattern, meaning prices making higher highs, higher lows, pulls back, forms the flag, breaks out. So look how big this flag pattern is. This is a much bigger structure. What happens when you break out of here? I think we're headed to all-time highs. And once you get to all-time highs, there's going to be a rush to get in, to not miss out, right? There's going to be a rush to not miss out. So we're looking, it's very bullish at this point. I see a couple of people join. So throw your questions in. If you missed the presentation, go ahead and throw your questions in. I can briefly go over it one more time, right? Trying to do these streams a little more interactively. But if you have questions or you want to know what we just let me know in the comments what you want to see. The Qs are breaking out, man. The Qs are breaking out. I'm pretty long Tesla. I'll show you my Tesla position at the moment. I got my last contract in, my full size in today. We'll take a look at that. I got my full size in today, and I'm riding this. I'm going to ride this wave. I'm going to ride this wave. So this is it right here. This is my full size. I got options out to February 2024. I think we have a ripper. I don't know how I'm going to play this out, but we're up right now on the moment. I got about 10 contracts. Want to see break even at 260, 270. I've been scaling into this. This is my swing trade. I like to swing trade. I'm not a day trader. I day trade? Sure, but it's not my forte. I'm a lot better at swing trading, and I've been watching this for a while. So I think the setup is here, right? You have the overall market in your favor. You have a nice pattern to enter, and Tesla has a long way to go. I think the upper limit is going to be somewhere around 600, the lower limit about 400, back to all-time highs. If the Qs just rip higher, Tesla's going to rip higher. There's going to be FOMO into the stock, right? So I'll keep track of this. I'll update you guys as we do these streams and let you know how it works out. Okay, how it starts to work out. I also added to Chainlink. I have almost full size in there on Chainlink. Those are the two big trades that I'm in right now. Chainlink's a little further out. Tesla, I'm not looking to trade. I'm looking to trade this in the next month or two, right? In the next month or two, it could be done. If it runs up too quick, I'm out. If it runs up too quick, I'm out. But we'll see how that plays out. Let's go back to Tesla. This is what I'm looking for Tesla. I'm looking for the break, and let's see, how oversold are we? Where's my RSI? Man, why does my RSI always disappear? It's weird. Oh, there it is. All right, so here we are in the RSI. This is the different type of momentum indicator, but I don't really want to get out. That's weird. Why isn't this working? Oh, I think that's as high as it goes. Okay, I see. So I don't really want to. I want to hold this until we get overbought. I really want to hold this until Tesla gets overbought. You can see on the RSI that the buying pressure, right? This is sort of the momentum indicator. We're breaking out on the momentum indicator. It's not really like the best way to look at it, but we had two very oversold conditions, which I did buy on, which I've been scaling in, and now we're starting to move up. So I expect this to move back to the highs, especially with the Qs breaking out. And this, I think Tesla can get to 400. I think it can get to 400, 350. I'll probably scale out on the way up, depending on the conditions of the market, right? Depending on those conditions, let's go to the weekly really quick, get a better view of this. So my guess is that let's throw some Fibonacci's on there. Where's that fib? There it is. From all-time highs. Do we want to go from all-time highs? No, I just want to go from the previous high. I'm going to look from the previous high here. Oops. We could get rejected too by this, but with as strong as Nasdaq is right now, and with the dollar falling and the macro forces falling, I think Tesla has a pretty strong tailwind behind it. Okay, so let's fib this. Let's fib this. Right at the lowest point, I think we go to. Well, the fib is not, it doesn't tell you where the stock's going. It just gives you a model. And let's be conservative. We go to 315. That was a previous high. That's a conservative estimate. Okay. We get a little more medium, a little stronger, a little less conservative. We're talking 370, 375. We're talking 400. And then if we really continue to break out, we have Cybertruck. If full self-driving comes into play, you're going over 400 pretty easily. And when Tesla breaks out to all-time highs, it breaks out pretty strongly, right? So that's what it looks like for Tesla. Looking at Chainlink, I mean, goodness sake, this is a very, very explosive pattern. I think we're going to retest 18, which was the previous strong. This is pretty strong resistance here. And if we break over 18, we're going to all-time highs. We're going all-time high. So I thought we'd have a bigger pullback to 1250, and we did kind of get it for a couple seconds. We got to 1290, pulled back a little bit, but just didn't hold. So yeah, that's what we're looking at here. All right, I'm gonna do a recap. It doesn't look like you guys have any questions. Let's just do a quick recap. Yeah, let me put it in this mode actually. Let's do it right here so I can create a short off this. So the Fed is done hiking. Okay, that's what we have here. The Fed is done hiking. Let me read this. The Fed is done hiking. The market is pricing in rate cuts for May, so sooner than expected. Now that things have actually changed here, the market is looking at rate cuts, which is very optimistic. And typically, it's like, well, if you're getting rate cuts, that means there's a recession. Not exactly, right? Not exactly. The market is pricing in those rate cuts because growth is set to slow down, but not collapse to zero. But the real reason is inflation. Inflation pressures are coming down. The way we're looking at inflation now is that inflation should be down to the 2%. Core PCE, this is the important metric, is at 2.5. Core PCE is at 2.5. I repeat, core PCE is at 2.5%. So if you understand that the Fed's target is 2% and it's barely November, December, January, February, March, if the GDP is slowing down, if the economy is slowing down, we're going to hit target a lot sooner, and the Fed can cut rates, not significantly. If you hit a recession, they probably cut a lot, right? But they're going to slowly cut rates. If they don't decide to cut rates, then maybe they'll stop draining the liquidity in the Fed's balance sheet. Very, very bullish for markets, and people are off sides. They're in cash. They are scared. They're waiting for that's why I say RIP, right? Rest in peace, shorts. Rest in peace, those waiting for the market crash. Rest in peace. Maybe you do get a market crash, but you need a black swan. And hey, you might get a run up of 20, 30% in a lot of these stocks before you get that black swan event. I don't think it's coming though. I think the Fed's on top of it next. The FOMC minutes are tomorrow. This should fuel markets even higher. I think the market might be pricing that in at the moment because it is very strong. So it might be pricing in a better FOMC. I'm sure those minutes already got released. Core PCE, again, that's going to be huge. Core PCE should be very low. Man, this is a great setup because the Fed is mostly focused on core PCE, right? They are focused on core PCE to decide to ease financial conditions. And we're going to get that in about 9 days, right? The end of November. And my bet is just like the last time, we're going to see very good inflation numbers. And that is going to get investors. The investors' biggest issue right? Their biggest fear is that inflation returns, and that has not been the case. It just hasn't been the case. You got to watch oil. It's not coming to fruition. So now they capitulate. They're not going to wait. They're going to capitulate. We're seeing it. There's buyers stepping in. Risk assets will outperform. We do get a pullback at some point, but this is very strong. The dollar and rates are falling. Okay, these are the macro forces, the technical macro forces. The dollar falling, risk on. Rates falling, risk on. It's as simple as that. Credit standards are not tightening anymore. So they're actually easing. They peaked out in March of 2023, which is when we saw the banking crisis, right? So credit standards are no longer tightening, and they're starting to ease. So what pressures are we looking at here? Not too much pressure. Maybe there's some, student loan, or not students, younger cohorts are struggling going into the Christmas season, but most of the wealth is with the baby boomers, and they are not slowing in their spending. As a matter of fact, they're still spending. They're spending on services, experiences, right? They have all the wealth and they're still spending here. Global liquidity. This is huge for crypto. Global liquidity, which is the central banks of the world in aggregate. If you add them all together, there's more liquidity coming into the market, and that's going to fuel risk assets, period. Okay. S&P companies are citing less and less cases of recession. So recession is not showing up in these S&P companies. They have adapted. They've used their tools, AI, artificial intelligence, proficiencies. They're cost cutting. There's no recession ahead. Employment is really the legs here. Do you get employment really fall off? I don't know. Another thing people are underestimating is the fiscal policies coming into Q4. The Inflation Reduction Act, right? Hundreds of billions. CHIPS Act, hundreds of billions. That's why NVDA is running up to all-time highs. That's why AMD is exploding. So chips are due to go higher. Plus, geopolitical risks are falling, right? The White House is talking with China. If we ease relations with China, that takes off a lot of the fear in Russia. That takes off a lot of the fear in the Middle East. Things start to cool down. Investors have, the investors that are offsides, all that cash in the money market funds, maybe it doesn't come in quick, but a lot of that cash is going to come in and hit the market, right? So EPS upside surprises are up. Earnings growth usually recovers pretty quick. That's it. The market is going to rip higher. Santa Claus rally. Stay up with the information. If anything changes, I'll let you guys know. Appreciate it. Stay blessed. I'll catch you on the next stream. And if you are from TikTok, I did get banned, so can't do the TikTok stuff. Anyways, you guys stay blessed. Stay informed. Watch my tweets if you want to hear what I'm up to. And I'll catch you next time. Thank you.